Hello and welcome to this evening's live panel discussion brought to you by the St. Kitts and Nevis Consumer Affairs Departments in celebration of World Consumer Rights Day. This year, Consumers International, in celebration of Consumer Rights Day 2022, is celebrating under the theme Fair Digital Finance. My name is Patrice Harris and I am the moderator for this evening's panel discussion, and I am joined by a few experts and professionals practicing in the digital finance field. I will allow each of these individuals to introduce themselves this evening. We'll start with the representative for the St. Kitts Nevis Anguilla National Bank.
Good evening. My name is Quincy Prentice. I serve as the Chief Information Officer at the St. Kitts Nevis Anguilla National Bank.
Thank you for joining us, Quincy.
It's a pleasure.
Good evening. My name is Leanne Irish Wade and I am representing the Eastern Caribbean Central Bank this evening on the discussion. I am a senior examiner in the Bank Supervision Department, and I am also a member of the ECCB's FinTech Working Group, which is responsible for the rollout of the Dcash pilot project. It is a pleasure for me to be here this evening.
Thank you for joining us as well, Leanne.
Hi, good evening. My name is Alex Strawn. I am the CEO of Genesis Innovation Management, locally known as JADCash, and I'm a tech enthusiast, and I am happy to be here with you this evening as well. Thank you so much for having me.
Thank you for joining us as well, Alex. I'm hoping that it's okay to refer to each of you by your first name, because I really would like for us to have a conversation that is light and allows for the public to understand the topic that we're discussing this evening. As I would have mentioned before, the theme for World Consumer Rights Day is Fair Digital Finance. And what the Consumers International Group has stated is that the global consumer advocacy movement calls for fair digital finance for consumers everywhere. The movement will generate new consumer-centered insights and campaigns for digital finance that is inclusive, safe, data-protected, private, and sustainable. In a rapidly changing marketplace, World Consumer Rights Day will spark the first ever global conversation, making the case for solutions that put consumer rights at the core of meaningful and long-lasting change. The theme seeks to discuss how digital technologies are reshaping payments, lending, insurance, and wealth management everywhere, becoming a key enabler for consumers of financial services. I would have read what Consumers International has provided as background information for this year's World Consumer Rights Day theme. However, I would like to have each of the panelists weigh in on their interpretations as to what is meant by fair digital finance. I see Quincy looking at me quite intently, so I'm hoping that means that he is going to back first.
I'll let the lady go first.
Well, the word fair obviously speaks of equity in terms of distribution. And then when you deal with digital finance, it is really the impact of new technologies on the financial services industry. So it includes in terms of a variety of digital products, services, processes, business models, and in terms of even how technology is transforming traditional way of doing financial services in the entire region and the world at large. I mean, I just remember just a few years ago, some financial institutions were, they were very hesitant to even start a loan process without you being physically at the financial institution. And with the whole thrust about digital finance, we see now a lot more products and services being offered by our financial institutions where persons can be anywhere at any time and conduct businesses. So when you deal with fair finance and digital finance, it's really how do you go about now ensuring that that there is equity around in terms of the usage, in terms of protection, in terms of even channeling the uses of digital finance throughout our financial services. So I will defer again to my esteemed panelists to give more on their thoughts on the matter.
Well, I think you almost said it all. But, I think from my mind, the word fear, I want to focus on that because we are celebrating the whole idea of consumer protection. And certainly I think that is key, even as we look at the aspects of digital finance and technology. So we can look at fear in a number of ways, whether it's fear with respect to persons having access to technology and digital finance. Certainly, whether it's locally, regionally, internationally, we often encounter scenarios where different segments of the community would be excluded for any number of reasons from the traditional financial systems. So clearly, as we move to adopt new technologies, the question is how can we capture some of those persons who would traditionally have been excluded from the financial systems, and whether it's through fintechs, and we have Mr. Alex Strawn here, who is doing a tremendous job in terms of leveraging technology to ensure that communities that traditionally may not have had access to the financial systems, they are being captured. So I think the whole aspect of fear is key for me, and that is something that I think we would like to capture in this evening's discussion.
Thank you so much. Both of you provided such a mouthful. Alex, these are big shoes to fill, aren't they?
That is the danger of batting last. You only have to get the runs over just the extra runs to just get over the hump. But for me, I would focus on the consumer somewhat. I see consumers of two types. For example, I see the consumer, you could put the group of those who are what we call informed, financially independent, savvy, etc. And they could afford anything. They could afford the additional resource of additional research, legal advice, etc. So fear to them is what they can buy. And then you have the other group of consumers which I'm very passionate about, is who can't afford anything and they basically deserve, but they need to be included. And so they are the ones who tend to have this herding behavior. Those are the ones who need the protections, etc. So when we're talking about fear, I pivot to the word that my good colleague used earlier, equity, equitable. We need to ensure that notwithstanding both parties, both these types of consumer having very different types of resource, that they have the access, the equitable ability to use these transactions, these type of transactions, and being included. And I think that's what I'm most passionate about, recognizing the differences. Too many times, for instance, some of us who have access to specific things just simply assumes that everyone has a smartphone, that everyone has access to the internet, that everyone has, because we do. And for me, when we're looking at fair digital finance, I will focus more than anything else. I will tend to, but what if that person doesn't have? And so for me, that's what I'm most passionate about, this consumer rights there.
All right, thank you so much, Mr. Strawn, as well. I want to go back a bit to some comments that Leon would have made earlier as it relates to the transformation of doing business. Now, where we want to start is discussing some of the challenges that different businesses, banks, or financial institutions might have faced in this emerging era. So here it is, we are accustomed of doing business in a particular way, and now we have what we describe as disruptive technology. And how do we advance and adopt to this type of technology, and what are some of the challenges that came about with that?
Sure. Challenges are many. Certainly, when you look at traditional banking systems, these tend to be based a lot of the times on legacy technologies. For the simple reason, financial institutions have often been quite slow to adopt new technology for good reasons. You know, accountants, financial persons tend to be a lot more conservative. The financial industry tends to be more heavily regulated than the tech industry generally. So whereas you would find a company such as Facebook, Amazon, Google, they're able to adopt new technologies at a whim. You know, they have very aggressive release cycles because of the heavily regulated aspect of the financial industry. Things tend to move a lot more slowly than the general technology industry. What that leads to is that we're now at a point where industries are being forced to adopt new technologies just because of what has been happening with the pandemic. We have all of these regulations seeking to enforce social distancing and the like. We're now being forced to transact at a distance, but a lot of financial institutions simply are not in a position to do so. We're now trying to accelerate the pace of digital transformation, and we are trying to fit in or bolt on to a lot of legacy systems, a lot of the technologies that, you know, companies out there such as Amazon and Google simply have been built from the ground up to adopt. So those are some of the challenges. Additionally, while technology, I would say technology is in and of itself is the easy aspect of doing things. The financial institutions tend to have you know, lots of processes and procedures. So it's not simply about rolling out a new app or a new website. That is simply the user interface, the way that the end users interact with the institution. But what happens on the back end of that, right? So there's no point in, let's say, rolling out an electronic loan application process or an application that allows you to apply for a loan online. But then at the end of the day, that's being handled by a lot of outdated processes that essentially make the overall process less efficient than it can be. That is also another issue that we find. And then finally, I would say economies of scale and cost. Technology can be very costly to implement and to maintain. And based on our relatively small size, this makes it very challenging, both in terms of being able to deploy the technology initially, whereas, you know, some of the larger financial institutions may be in a position to, you know, afford the costs of deploying these systems and maintain them as time goes on. Many of the smaller financial institutions will face many challenges in simply affording these technologies and being able to deploy and maintain them. What we've seen regionally within the last, I would say, 5 years is a move towards consolidation of the financial space. We've seen the exit of many of the international financial institutions. And I think that presents an opportunity for many of the local financial institutions to, you know, grow in terms of scale and scope, and therefore make greater use of the technology that is available, simply because they're increasing the customer base, and it makes it more cost effective to deploy some of these technological solutions.
All right, Quincy, you spoke about economies of scale, you spoke about cost, you spoke about the conservative nature and a lot of the legacy processes that would have been established within the banking and financial institutions that make it sort of difficult for the adaptation and the slow rate of adaptation that is within these institutions. But Leanne, is there anything else that you would like to add that you consider to be some of the challenges as well?
Points that Quincy made in terms of having the policies and procedures in place and not adapting them to the new digital environment. So I think it's a whole change of mindsets, because obviously moving into new technologies, you can't expect to have the same processes and procedures to go along with these new platforms and this new technology. So I think that is one of the biggest challenges, I think, that our whole financial space has. How do we move from what we are accustomed to doing to now to something different? And you have to change your whole processes and procedures. And I think another challenge that I think I'm going a little further, after even these financial institutions have invested in these technologies, I think a challenge they are having is even the speed of adoption by their customers. So the use of those facilities by their customers also creates a challenge for them. And I think that where, even as Alex was speaking earlier, it comes down to education of the public. How do you go about then to educate them and to let them know in terms of the advantages and the various uses? How do you meet their challenges, as Alex say, in terms of internet connectivity that may be even bigger than just the financial institutions, that governments may now have to get involved in terms of policy and framework. So it's a lot bigger issue. I mean, while financial institutions are the brunt of it in terms of introduction, but it becomes a much wider issue.
Well, I actually, while Quincy was speaking, I thought about the theory of diffusion of innovation and how persons adapt to new technology and how they adapt to new types of innovation. And we know we're going to have that team, that group of persons who are going to be so excited. They're going to be the early adopters wanting to use it. But I'm trying to think about, even from my own understanding of the Digital and Innovation people, as to where we are in that spectrum. Do we see, and Mr. Straw and Alex, I think you can answer this, do we see a real great sense of appreciation and adaptation for these newer types of technologies, especially as we're speaking about challenges? Because Quincy spoke from more like the back end from an institutional perspective, but from a consumer's perspective, where do we think we are on that spectrum?
I think we have thank you for that question, because it is something that we have had to grapple with from the beginning. When we developed our product, for instance, we were excited about it, and we developed it with specific persons who were having specific pain points in mind, having first had discussions with them, etc. And then we came up across some cultural issues, and we had some other persons who were quick to adapt, quick to want, but then the bulk of the persons had reticence to it for a number of reasons. One of them, in that some of these systems come with a lot more transparency. And for some persons, that transparency makes them more accountable. So for example, if you are doing a subcontract for someone and you're doing transactions to this particular, let's call it app, the person who contracted you could see what is happening, and some persons do not like that. So we're having those sort of transparency issues for one. But you're also having, going back to what you said earlier, outside the education, etc., you have access, which is a real thing. And I think when I spoke earlier, I was very passionate about that. We tend to assume that the playing field is level, and it's not. How many of us, for example, and especially now gas price and stuff going up, how many of us will switch from a postpaid to a prepaid, or coop the next Wi-Fi hotspot just to be able to have a particular access to be able to do a particular thing? These are the sort of policies and infrastructure required so that we could have broader adaptation, because you can't have a digital economy without a digital infrastructure. If you look at those countries who have actually have success in those realms, you would recognize that the digital infrastructure is basically par for the course. Everyone has access, and then on that access you could build additional things, and education then just comes of a matter of course, so that people could weigh their pros and cons. So you need to take specific challenges off the table, not just simply educate, not just simply say, try it, it's better for you, because first I need to be in the room to be able to have access to it.
Most certainly, and I think you've been alluding to the digital divide quite beautifully this evening rather, and it is so true. It is a real assumption that we tend to have, that people do have, one, the inclination to use the technology, the understanding of the technology, and access to the technology. Now, we're in an era that is currently being described as a post-COVID-19 era. And that is even debatable in and of itself. However, in the heart of the pandemic, we saw what I would like to think is an increase in demand for the use of digital technologies, especially as it relates to conducting business and doing business online. And so what we want to speak about now is the new normal for financial services and banking and institutions of these sorts, especially as it relates to what we saw coming out of the COVID-19 pandemic. So who wants to pick up this question?
General flow, and I think then Quincy could probably go into the heart
I just
of
love
it
how
today.
y'all just map it out, like how y'all just map.
So there's a quote that I really I liked it when I hear it. It was a quote from a CEO of Tata Consultancy Services. His name was Natarajan, and he said, going digital is no longer an option for all of us. It is a default. So when I think of the new normal for financial institutions, I think of us going digital. That is the way that will be the new normal for us. It is no longer an option. I mean, and the pandemic has really proved it for us that, we cannot, it's hard to stay in the old age that we were in. We have to push towards going digital. And for that, as you have said, we have seen a lot of products and services coming out of financial institutions because of the pandemic. So you see that a lot of financial institutions are now investing in things such as electronic loan applications, softwares and systems. You see even new features coming up for existing digital platforms that they have. So mobile banking, before you could not do an EFT, and I'm seeing certain institutions are now instituting electronic fund transfer, that is. For even your mobile app. So you're seeing a lot more involvement of the existing digital products and services, and you're seeing a lot more being added to the front. But again, Quincy being at the heart of it can maybe speak more on that.
I think, Alex alluded to something that was interesting, and yourself as well, with respect to the whole idea of the digital divide and what is the driving force behind the adoption of new technology. Interestingly enough, if we're able to look at some case studies internationally, certainly we have the case study of Kenya, where M-Pesa is a digital payment platform that is leveraged quite heavily there. We have certain examples in India as well. And interestingly enough, if you look at these countries, the actual level of adoption, or let's say we were to look at mobile penetration, for instance, the rate of mobile penetration in those countries, when compared to St. Kitts and Nevis, is actually quite low, right? And I think it goes back to something that we've heard from time immemorial, in the sense that necessity is the mother of invention. Persons adopt new technologies at the point at which they are forced to do so, or they have no other choice. And I think, what has happened with the pandemic is proof positive of that. We've had, industries who have waited for years and years to adopt new technologies, and the point at which it's really being adopted and that digital transformation is being accelerated is a point at which we had no other choice but to do so, right? What we're seeing right now, and as a result of the pandemic, we've seen lots of economic challenges worldwide. consumers and financial institutions are ready now more than ever to adopt technological solutions, as a means of facilitating commerce, even while we seek to mitigate the risks that inherently come with moving, to whether it's moving your processes online or adopting more digital technologies. At the National Bank, we like to say banking anywhere, anytime. And that is a mantra that is becoming more pervasive in our day-to-day lives. Financial institutions themselves are also have also been affected by the pandemic, in the sense that, when we look at what happened at different financial institutions over the past 3 years, we have also had issues in terms of whether it's staff being out, numerous staff being out at the same time. And we had to activate business continuity processes to ensure that the work continued, right? Whether it's in terms of continuing the work as a result of staff outages, or even continuing the operations during lockdown periods so that commerce could continue. These are all things that prior to the onset of the pandemic perhaps would not have even had an opportunity to be done, simply because of the tendency for us as financial institutions to be more risk averse. We don't want persons to be working remotely and God forbid there be something that goes wrong with that person who's working remotely. Financial institutions have also sought to implement new modes of operations, again with a strong focus on risk management, and doing so without jeopardizing our core business values and operations. So for instance, we've sought to embrace new modes whereby prior to the onset of the pandemic, you would have had to come into the bank to stand in line and wait to open a new account. But instead of doing that, you're now able to make an appointment. Something that could have been done before, but as a result of the onset of the pandemic, we have now shifted. I would say there's definitely a shift with respect to consumer behavior as well. We've seen no less than 100% increase of the adoption and utilization of the mobile banking application since the onset of the pandemic. Mobile banking application was there all the time, but as a result of the pandemic and the desire for people to do business at a distance, we've certainly seen a significant increase in the utilization of the mobile application and other systems as well. Right.
Just from my own curiosity, you mentioned that you have seen about 100% improvement
Yes.
in the use of the digital technologies to the mobile banking, doing the services online. Was there at any point in time where we saw this rise and then peak and then start to fall?
Well,
because I am still a bit perplexed as to why the bank lines are so long.
Interestingly enough, there are some persons who, despite our best efforts, they love to come to the bank. And I think, that is a challenge that we have in terms of perhaps our customer profile has something to do with that as well. But, we are definitely working hard to reduce the length of those lines. Okay. And we're doing as much as possible to encourage customers to utilize the mobile banking app, utilize online banking, utilize the ATMs. We have a significant ATM footprint throughout the entire country, right? And whether even in as much as we're encouraging customers to adopt electronic payment channels, we still maintain a significant ATM footprint. So whether it's cash or card, you can access the services that you need without coming into the bank. But much to our chagrin, sometimes the lines are still quite long. But I think that is something that is being worked on, and over time we would certainly hope to see a reduction in some of the lines.
If I may jump in here, thought crossed my mind. As humans, we are very social creatures. And I think the pandemic, like for example, during the pandemic where we had, as much as we had the pressure, the push to go technology to do things remote, etc. You had the social aspects where we had increases in domestic violence and a number of other stuff, because we are social creatures. But again, technology could solve that. So for example, what some banks have done, for instance, is that you're not only using the technology, but you start to put a human interaction to it. So you might have an operator on the other who could be working from home. So you need help. You not only submit it electronically, but a face comes online and has a chat with you. So it gives you that sort of interactive space, so that as a social perspective, you don't feel the need to actually go down, stand in the line and work with someone. You actually have the ability to engage and feel like you are being heard, rather than just the interaction with the dry technology. So they are hybrids. They are ways that you could leverage the system to maximize, yet still make people feel that they are part of a community. And I think Quincy had spoken to this earlier, where we talk about the legacy, the responsibilities of some of our financial institutions, in that they have this fiduciary responsibility, responsible for so much, that it's not like just throwing the baby out with the bathwater and just shifting left suddenly. Is that they have to bring everyone along with them, and you have to do a balance. It's a very balancing approach. And I think while you're embracing technology, if you remember the social aspects, etc., we can bring more persons along. Leanne alluded to education, but not just the education, is remembering in being empathetic. You then bring along, and so for instance, I have got to National Bank site, I'm asking for help, and somebody said, would you like to chat with our representative? And you say, yes. And then you see a post, hi, my name is Janet, and I'm here to help you today. How may? And immediately you start having a very different interaction, and you feel somewhat, and the next time you go automatically to the tablet or your phone, because you know if you need that personal interaction, you can have it. You don't need to go to the bank anymore. So it is, how do we bring everyone along?
Thanks for that idea, Alex. Gonna implement that.
At least you said it on live television, so we know where it came from. But certainly, Alex, in all of our conversations about technology and designing technology and the digital economy, it always has to be designed with the end user in mind, and recognizing that we are indeed social beings, social creatures. We thrive on connections, and that is why persons might not particularly like calling into institutions and having to go through auto attendance and so forth, because that is what we thrive ourselves on, interaction and communication. So all of our technologies must be designed with the end user in mind. Now we're getting very close to the half mark of this program, and before we do so, I want to give Leanne and Alex the opportunity to speak about Dcash and the JAD app. And I'm doing this because I'm setting up a premise for a few questions that will come after the break. So Leanne, we'll let you go first by explaining about ECCB's Dcash system.
And I don't know if it was by design, but it is so good that both Quincy and Alex are partners with us in our Dcash pilot program. So it's good tonight. So Dcash, I always like to start talking about Dcash by first really letting the public know that Dcash is the digital version of the EC physical dollar. And a lot of times person here digital dollar, they automatically think of cryptocurrency. And again, I like to go and say it is not a cryptocurrency. It is legal tender, as it is just, again, the digital version of our EC cash. So the pilot program was launched last year, March. And as of now, it is in 7 of our 8 territories. And the main objective behind our Dcash was threefold. And again, having our consumers in mind. We have heard the cry of a lot of our citizens on the high payment rates that they have to do in terms of transfer of monies. And again, back to the whole fair digital finance, we thought that how can we really assist our citizens in terms of reducing some of the costs that they have to go through in terms of payment systems. So the Dcash aimed at one, providing an alternative options for payments that, again, using our hashtag, is cheaper, faster, and safer. And cheaper in the sense that in the pilot right now, there is no cost for actually transacting with Dcash. We're hoping that should we commercialize, that the cost will still be cheaper, because we really want to maintain that whole thrust in terms of making a cheaper payment option. Faster in that it is instantaneous, and again safer in that obviously it is safer than actually walking with cash. If you lose your cash, you cannot recover it. With the Dcash being on a smart device, if it gets lost, you can recover that funds. Again, another objective of the Dcash was the whole thing of financial inclusion, again bringing back the equity into it. We realize that not every person have a bank account that is able to do easy transfer. We're in a currency union, so we have a lot of persons cross islands. I'm a Dominican, I live in St. Kitts, I have family in Dominica I want to send something for. So again, we wanted to really create that financial inclusion or promote it, and with that we have created 2 wallets, and it is so good that Quincy Scanab is providing our registered base wallet, and that registered base wallet is those wallets that are tied to financial institutions. So it is for those with already existing relationships with financial institutions. And we have Jad, Alex, who is now one of our providers for the value-based wallet, which is a wallet that you don't really have to have a relationship with a financial institution, but you are still able to obtain a wallet. And later on we can go, I guess, into more in terms of the types of wallets and what you get from both of them. But that was how we tend to promote the financial inclusion. The third objective for Dcash was just to create that innovativeness and competition within the market, especially for our small and medium enterprise businesses. And again, one of the strategic objectives of the Eastern Caribbean Central Bank is in terms of digital transformation. That is one of our objectives, and that was a way in which we could promote that digital transformation. So for now, I will stop there and again answer any other question on Dcash later on.
I have some questions for you later on. Alex, tell us about JADAP.
Jad Cash, but JADAP as everyone loves to call it. We love that anyway. It's a multifunction wallet that enables you to pay and get paid. Fortunately, we are front runner to ECCB's Dcash, etc. And we share the very same tenets in terms of why we started up. To meet people where they were in terms of technology. So for example, you didn't need to have a bank account. You could get paid and get, from a business card. We could meet you wherever you were and use whatever you have. Quincy will say banking any place, anytime. But not so much the banking, but being able to get paid. You no longer have to depend on, say, PayPal or some entity outside of the OECS to be able to get money or move money. You don't have to go physically to, say, a Western Union or MoneyGram to move money from yourself to a relative. But we have gone way beyond that. What we did when we created JAD, the JAD as we tend, is to create an ecosystem, a platform on which we could then build any sort of e-commerce ecosystem that then pivots, especially the micro business, from a bus driver to someone selling sugar cake on the road, being able to literally build out a shop, to be able to buy a football ticket and scan the ticket at the gate to be able to attend music festival, carnival last season, events, etc. JAD app is able to create that foundation, that space that our people can basically pivot, get paid and pay payments without having to invest in technology themselves. When I say invest, I mean, yes, you have the hardware, you have the phone, you have the tablet, you have access, but you don't have to now go simply and borrow a loan just to pay a web developer to do expensive stuff for you. The JAD application creates that sort of nascent, out-of-the-box, foundational sort of solution that any business, any micro, any individual, any hobbies could just basically use and achieve so much more.
Thank you so much for both of you, that is Leanne and Alex, for explaining what exactly the ECCB's Dcash system is about. I know that there has been some publicity about that initiative, and the public at large might not be fully aware as to what it all entails. I know that JAD has been in the market for quite some time, but even still with that, some persons might not fully have the knowledge as to what is included in that. In my estimation, and you can, the three of you can agree or disagree, we're still very young. We're still very early in the stages of developing this digital economy, especially as it relates to financial banking institutions doing business. But there is still a notion that there is some level of saturation, saturation of the technology. Would you agree or disagree? What are your thoughts on that?
I tend to disagree, but I think I would have a natural bias towards disagreeing. But I certainly could understand, the whole notion that there is some sort of saturation, because technology is so pervasive. It's everywhere. It's ubiquitous. You wake up in the morning, the first thing you do is check your cell phone, probably, and just every single thing. It's technology, technology, technology. Notwithstanding that, I would hasten to say that. In terms of innovation, I don't think we're just at the tip of the iceberg as it relates to innovation, and certainly as it relates to innovation in financial services. Recently, over the past 5 years, I would say that we've seen a rise in fintech, and we've heard that term used quite frequently. These companies have a strong focus on technology and have been able to disrupt the financial sector. Primarily through the ease of use of their platforms. We just heard Alex explain how he's been able to develop a platform that is extremely easy to use. I must say I've used it myself, and notwithstanding I work with a bank, I think Alex's platform is excellent. Whether it's through the use of QR codes, NFC, blockchain, peer-to-peer, it is clear that innovation is still ongoing. Notwithstanding the rise of fintechs, however, I do think that there's still a place for traditional financial institutions, and they are critical in the overall financial systems. We do not expect that because of innovation and the rise of fintechs that financial institutions will simply disappear. There's still a place for everyone to play.
Yes.
And I think the idea is that we leverage innovation to find ways and means that we can have symbiotic relationships with fintechs, with the regulator, and with traditional financial institutions.
Thank you, Quincy. Alex, what says you as it relates to saturation? And you're taking us into the break.
Thank you. I would say no. We are very much, especially here in St. Kitts and Nevis, at the tip of the iceberg. We have not begun. Yeah, we might see certain things on TV, we may do order online, etc. But even locally within the community, etc., we still have not begun to really see the default, as one would say, that we have been using technology to do everything. Yeah, you might see an uptick in terms of people ordering lunch. It's 6-9 to go, carry beats, or any of those sort of means that people order and they get stuff. But generally, I would say no, there's so much more. We have just begun to scratch the surface. We have not even talked about decentralized finance. We are just beginning to see, coming out of COVID, that nudge, that push towards online application, etc. And I know we most likely have to go to a break now, so I'll leave it at there. But we are just
I really
starting.
wanted to ask that question before the break so that we can have the persons glued to the program so that they can certainly join us after the break. But thank you for staying with us. We're going to take a short commercial break and we'll be right back.
Or repair if the goods are faulty or misdescribed. They may choose to accept a credit note if they want to buy other goods from the store owner. Customers need only accept a replacement if that's what they want. No refunds notices are illegal and cannot be displayed on stores. Therefore, they cannot take away the customer's right to a refund. Second-hand goods must be in a reasonable condition for their age and price. The retailer is responsible for the goods which he or she sold to a consumer. You don't have to deal with manufacturers over faulty goods. The same rights apply to sale and non-sale goods. It doesn't matter if you bought them in a store. If a faulty good caused damage to another good, the customer can claim compensation. The customer cannot complain about faults of an item that were made known at the time of sale. However, they still have rights if other faults become apparent after purchase. A message from the Department of Consumer Affairs.
The Consumer Affairs Act of 2003 and its application applies equally to media advertising, websites, catalogs, brochures, pamphlets, billboards and posters, point-of-sale materials and signs, statements made between the salesperson and the purchaser. The Act expects businesses to disclose all the information that they have about the item or service, especially where that information will be influential in the purchaser's decision-making. The Act applies equally to pre-contractual negotiations and to statements businesses may make concerning post-contractual obligations, for example, the availability of maintenance or repair services. Beware of false advertising and scams. Sale advertisements must describe the name, variety, and size of sale items, as well as any restrictions which may not be in fine print. It is illegal to commit bait and switch and promise savings on items that aren't actually available when customers go to the store. The best rule of thumb for any offer is, if it sounds too good to be true, it probably is. In-store sale signs must clearly display the pre-sale price, and the business must have reasonable quantities available. If a store advertises that it is having a specialty sale due to elemental damage or because it is going out of business, liquidating, lost its lease, or renovating, it must have a special sale sign. This is a message from the Department of Consumer Affairs.
Use this checklist to plan your purchase. Decide in advance exactly what you want and what you can afford. Ask family and friends for advice based on their experience. Gather information about the seller and the item or service you are purchasing. Review product test results and other information from consumer experts. Get advice and price quotes from several sellers. Get the seller's refund, return, and cancellation policies. Retailers sometimes do not update their point-of-sale system with current prices. If you think the price displayed is incorrect, inquire at the cash point before finalizing your purchase. Ask whom to contact if you have a question or problem related to the item purchased. Thoroughly read and understand any contract or legal document you are asked to sign. Make sure there are no blank spaces. Insist that any extras you are promised be put in writing. Don't buy on impulse or under pressure. A message from the Department of Consumer Affairs. Tips and advice to remember. Unless the product is defective or unfit for its intended purpose, businesses are not required to give you a refund on the purchased item if you find a better deal elsewhere or change your mind about wanting it. No exchange, no refund notices should not appear on signs, receipts, or communicated verbally. This rule also applies to items that are on sale. Never sign a blank contract that a salesperson says will be filled in later. Always keep your receipts, canceled checks, warranties, estimates, contracts, and instructions. They can be useful in problem solving if you encounter any problems with goods or services. A message from the Department of Consumer Affairs.
Thank you for staying with us. This is a panel discussion brought to you by the St. Kitts and Nevis Department of Consumer Affairs in recognition of World Consumer Rights Day. The theme for this panel discussion is Fair Digital Finance. This evening I have been joined by three professionals who are actively practicing and working within the field of digital technology, especially in the financial sector. We have representatives from the ECCB, from National Bank, and from JAD Cash. Our conversations this evening have surrounded the use, the adaptation of digital technologies, especially as it relates to the financial and banking institutions in St. Kitts and Nevis and the Caribbean at large. We've spoken about the ECCB Dcash system as well as JAD app. That's where we left off. And we started a conversation about saturation of digital technology services. Mr. Strawn, Alex Strawn, was the one that took us into the break about his interpretation about saturation, and he totally disagreed with that notion. So, Leanne, I'm going to give you the opportunity now to share your thoughts on the notion of saturation or not.
While I'm not as tech savvy as Alex and Quincy, just from looking at things, I would agree with both of them that the market is not yet saturated. I mean, there are so much more that can be done in terms of technologies for finance and banking. I mean, and even when we look at even just having the sandbox for fintech companies to innovate and to create things, even we have not even reached that stage yet. So imagine when we reach that stage and person can actually test out their technologies before even launching it. So there is still quite a bit that we can do. So I would agree with both of my colleagues that the market is not yet saturated.
And so we've spoken about emerging technologies and digital technologies, especially as it relates to banks and financial institutions. And Leanne, you have really cushioned us into our next point, where we're going to be discussing more or less the framework and the mechanisms for how all of these things can actually work, especially as it relates to digital payment systems. So one of the hesitants or the reasons why persons might be reluctant to use these digital technologies is because of the safety mechanism behind it. They're not sure how safe their information is. If there's anyone on the panel tonight who would like to speak to some of the safety mechanisms and how safe it is of actually doing business online, let's start with that conversation.
Sure, I'll take a
The cybersecurity expert.
I wouldn't call myself an expert. But certainly, I think you've hit on a key point. Cybersecurity is of paramount importance when conducting business electronically. There are several mechanisms, generally speaking, that have been developed over time to ensure that consumers can safely transact business online. One of which is the use of encryption. Encryption was developed many years ago as a means of ensuring that communications during times of war could be done securely between the generals and the troops, on the battlefield. So you can think of encryption as, think of it as me and you having a conversation. Now, if anyone who has ever been in a foreign country where the native language is not English, you could think of that as encryption. You can hear the conversation that's ongoing, but you can't make head nor tails of what the person is saying, right? And that is the essence of encryption. For the prime reason that when you're conducting business on the internet, you must inherently assume that all of your communications are visible to an adversary, right? So encryption is used to ensure that although the communications are visible to the adversary, they would not be able to interpret what it is they're seeing. And encryption is used widely on the internet to ensure that communications are secure. How do you know that you're using encryption? Typically, you will be browsing a website. Let's say it's Amazon.com, eBay, what have you. You would typically see the HTTPS at the beginning of the URL string, and that denotes that the session that you're using is secure. The use of multi-factor authentication. It's a big word. It's typically abbreviated as MFA, and typically you would find that, especially it's becoming more and more prevalent nowadays, that you sign into a website, and traditionally you would expect to just use a username and password to sign in, right? Multi-factor authentication takes it one step further, whereby you're using what's called a second factor or even a third factor. And the factors are typically something that you have, something that you know, something that you are, right? Something that you have could be a physical token, your smartphone, some device, a key. Something that you know, username and password. Something that you are is biometrics, your fingerprint, retinal scan, facial recognition. And certainly with the prevalence of smartphones, I'm sure persons would have encountered many of these factors in day-to-day use. And thirdly, another mechanism that is in place is regular transaction monitoring. The good old, having eyeballs on the screen, looking at transactions on an ongoing basis. And I would dare say it's not necessarily just persons looking at transactions, but nowadays artificial intelligence is being leveraged more heavily to analyze the patterns of traffic and identify what is normal from what is abnormal. And that is being used to say, hey, it's either being flagged automatically and that transaction might be blocked automatically, or an alert may be raised for a human to look at the transaction and make a determination as to whether or not this is something that really warrants further investigation. So I said those are three mechanisms that have been implemented to ensure that consumers can safely transact online.
Thank you so much, Quincy. Leon or Alex, any addition to the conversation about ensuring that the financial data and information of the end users do not end up into the wrong hands?
From a regulator standpoint, I will talk from that broad perspective. I mean, you know that we are key on risk management frameworks. So that is something that we encourage our licensees to ensure that they have. Ensure you have policies in place. Ensure that you have, in terms of penetration testing, you do all of these things to ensure that your systems are really, solid. So one of the things that we are in the process of doing is actually issuing cybersecurity standards and guidelines to provide our licensees with further information on things that they need to do, risk management frameworks that they need to have in place. So all of that from a broad spectrum would help to now really safeguard our consumers in terms of various risk to cybersecurity when we have that global guideline and standard being provided to our licensees.
Again, last batsman. But yeah, one just to just top it off in terms of certification, and so it just basically just follows on from what Liam was just saying, in that the encryption, having these policies in place, it is important for practitioners in the industry, those of us who do transactions, to share this information with our customers, that we are certified to this standard. This is how we are going to protect you. The other thing that I believe we don't do is what we create honeypots. They're like, for us at JAD, for instance, there's only certain basic information that is on the phone or the application itself. Other data, etc., which is sensitive, etc., is kept totally somewhere else. So we don't create these honeypots where people could have intrusion and have access to it. But then all of the permutations that Quincy would have spoken about earlier, encryption, multi-factor authentication, etc., then must be used. That information in its transmission and storage must be behind those sort of protection. And those are the sort of things that we are passionate about, because we do recognize, especially in our culture, people cannot afford to lose a dollar. So people are very fearful of this. And so we need to be able to, with the education, assure people that your money is as important to us as it is important to you, and that we have taken the necessary steps through certification and all of these implementations. And we have our policies. We should be able to put out our policies and say, these are the policies we adhere to. Like the GDPR, if you want to see what data we hold for you, this is how you do it, this is how you access. If you need us to delete it, this is what we're required to do by law. And once you ask this is what we will do. We will anonymize the data, blah, blah, blah. We must hold it for these reasons, anti-money laundering, etc. But these are the sort of policies we must be willing to share with the public, because it is fair for people to ask these questions. It is actually fair. You know, sometimes you go to the doctor and you ask the doctor a question and he gets upset. It is supposed to be okay for persons to say, what are you doing with my data? How are you protecting me? And we must be willing to assure them, to reassure them that we have taken the best protection and care of their data, and if they want us to do something else, please tell us.
If I may add,
Sure.
Yeah.
because I think it's really important. The whole issue of creating a more informed consumer base, because notwithstanding all of the technological constructs that I just mentioned, I think having an informed consumer is one of the most critical components of an overall security architecture. At National Bank, we have a program that's called the National iSafe program, whereby cybersecurity tips are often posted via the Facebook page. So the whole idea is that we educate our users and we keep them informed about typical threats that are out there in cyberspace, what to look for. How can you ensure that you're transacting business in a safe manner? And ultimately, an informed user is a more secure user. One of the major types of attacks that we see nowadays is the whole phishing, social engineering type attack. And that is typically one of the initial points of entry for any type of attack. So, you could just be using your computer, checking your email, and you get an email that says, congratulations, you just won $1 million. Or your long lost aunt in the UK left you an inheritance of some large amount. Quite often, that is just not true. It's a means that attackers use to fish. And it's an analogy for real fishing, where there's some bait on a hook, and the bait on the hook is something that you want, whether it's a resource, money, maybe you're trying to download something, you're trying to get something for free, and that is often what is used to bait users into doing things that would be detrimental to them.
Quincy, I'm not sure if I was thinking out loud before you stepped in, but I really wanted to throw a curveball question at you in terms of providing some guidance to consumers and persons, because we're asking them to step into this digital economy and to this new emerging technologies with us, but we haven't really provided the best forms of education and information sharing as it relates to conducting and transacting business online. So we should not take it for granted, as Alex would have mentioned earlier, that persons are fully knowledgeable or aware as to the safe way of doing business online. So I'm happy to hear you speak about the National iSafe program and the types of tips that are being shared. But if there's just one or two major tips that you would really like to share, because I would really like for the persons who are listening to walk away more informed and better educated.
More informed?
Yes, about this.
Okay, so I wouldn't say it's just one tip, but typically what happens is that, as I mentioned before, the whole idea behind social engineering, and social engineering is just a fancy way of saying, I'm trying to get something from you, I'm trying to get to your data, your financial data, whether it's your credit card number, your date of birth, your social security number for persons who are living in the United States, which can then be used to open accounts and what have you. But for us, in St. Kitts and Nevis, it typically would be your credit card number, your debit card number. That is a resource that you have, that's your prized resource that an attacker is trying to get to.
Okay.
Right? That's the first piece of knowledge. You have something that an attacker wants. How is the attacker going to get that from you? They're going to try to trick you into doing something that you should not do. Right? Okay. Now, the armed with that knowledge, it's important that consumers adapt their behavior and act in a manner that's consistent with someone who's trying to protect something. So you get an email from someone that you don't know. You get an email telling you that you've won huge amounts of money. I hate to tell you, but 100% of the time it's
Not true.
it's not true. So don't click the links. Don't open the attachments. I think those are some of the key things that you can do to prevent yourself from becoming a victim, right? Another type of attack would be, again, it's along the lines of social engineering. Someone you know. I mean, I know Alex, and all of a sudden, out of the blue, I get an email from Alex. Hey, Quincy, man, I'm in the States. I lost my cards. I need you to wire me some funds. I'm really in a desperate situation. The attackers typically create a situation that is urgent, that you have to act now, otherwise something bad is going to happen to someone. Simple. Pick up the phone and call Alex. Don't just go and send thousands of dollars to Alex just because he sent you an email or he sent you a WhatsApp message or a Facebook message asking you for help. It's always good to just do a good telephone confirmation. So I think those are...
Yes, those were excellent. Those were excellent. I have my own that I do, but I'm
Yes.
really going to consider those and add those
Yes.
to my pool as well. Thank you so much, Quincy. Believe it or not, we're getting ready to head into the final break. But before we get there, I want to talk about transaction fees, and everyone on the panel is chuckling. I want to talk more about transaction fees. I want to talk about the required minimum spend when you're using debit cards, and whether or not it is right or legal to pass on whatever charges you might get from the bank to the consumers. So which of those would you like to tackle first? I don't like that stare you're giving me, so I'll look at Leanne. Leanne?
Well, I am not a lawyer, so I will not go into any legality matters tonight. I think what I would mention is that a lot of people think that the central bank regulates fees and charges. But one of the things I really would like to, educate the public on today is that the central bank does not regulate fees and charges. So the fees and charges are set by our licensed financial institutions, but what we try to do as the central bank is to give the public the information so that they are informed to make their decisions. So what we have been doing for a number of years now is getting the actual fees and charges for all the products and services of all our licensees. So you could actually go on our website and click on a financial institution and actually see all their fees and charges that they have. So you could even compare it with another bank as well. That is full transparency that we are offering to our customers and our client. But as it is right now, we do not regulate fees and charges, and that is something that a lot of our public do not know, or they keep calling to inquire about, and we always have to keep saying it over and over. At the moment, we do not regulate fees and charges, but we have been hearing their cries. I mean, it's something that we continue to monitor and we continue to assess to see how further we can assist, but at the moment, we do not regulate fees and charges. So I turn over to Quincy.
I want to see who's going to be the brave soul to answer. Is it legal for a business to pass on your transaction fee?
I think the person who is eminently placed to answer that question is not on the panel, but he's in the room. But I'll take a shot.
Okay.
Now, you asked the question whether it's legal. Again, I think I'll take pattern from Leanne in the sense that we perhaps may not be best placed to answer that. But I think what is clear, we can at least speak from what the expectations are and what is permissible based on the contractual arrangements that are in place between a merchant who accepts card payments and the financial institutions and the card brands. And those agreements essentially would prohibit passing on any of those fees onto the consumer. Now, I think where the gray area is and where perhaps there's an opportunity to add some more structure to our existing framework locally and regionally is the lack of legislation that gives clarity to that. Because notwithstanding the fact that the agreements with the financial institutions and the card brands, Visa, MasterCard, would prohibit that. Generally speaking, the local legislation is what would take precedence over those agreements. However, I think it is clear that we do not have that sort of legal framework at this point in time that gives clarity to, the legality of that.
Right.
And I think that is certainly an opportunity, as we're here in the spirit of consumer protection and consumers' rights, for us to sort of bring that overall clarity to the overall financial space and saying what's legal, what's not.
Thank you so much, Alex. We're actually going to have a conversation after the break about the legislative framework and what is required. But before we get there, Alex, what says you?
I adopt the protocol. but again, Quincy hit the nail on the head when it says there are contractual relationships between the card association and the merchants, etc., that say you should not pass on specific fees. And there is a gray area depending on the product. So, for example, let's take us, for example, we operate a digital wallet. Or if you're using a prepaid card, etc., there are some, like if you would realize that if you were to use your, say, I used to say Scotiabank debit card, you might see a POS charge, etc., even if the merchant didn't pass it on, etc. So they have been, even within those contractual arrangements, where additional fees could be tacked on to the transaction. And again, a part of it is education, and part of it is how do you ensure that the customer know those things up ahead of time. Disclosure, even during transactions, you should be able to disclose to the person ahead of time that this is what's going to happen, this is what happened, and give the person a chance to say yes or no. What I tend to advise clients is that I believe as a client, as a vendor, you should absorb the charge. That you should have, when you're pricing your goods, factored in the cost of doing business. And in factor in the cost of doing business, and you show a customer a price, the customer should see the price, don't have to do any sort of maths in their head, whether they need to pay extra or not. But it also defeats the purpose of digital adoption. Because if you're going to be paying extra for doing a digital transaction, then you're inadvertently telling people stick with cash. Because you don't inherently have to pay extra $2 on a cash transaction. So again, what exactly, even from you as a vendor, what are you trying to telegraph? Because cash, whether you realize it or not, is more expensive. Cash, you still have to worry about security, miscount, giving back in inappropriate change, etc. So even beyond the legal, it makes common sense to say factor the cost of doing business into the transaction so that the customer see, the customer adapts, and overall you will get that back from your overall efficiency and lowering your cost of handling cash. That fundamentally is what we would want to encourage people to do. So even outside of the illegal, we would believe that's a sort of thing that businesses, and perhaps again in the realm of consumer and business training, what we need to start to do is have these business seminars. How do you correctly price your goods? How do you factor these things in from a matter of doing business, etc.?
Thank you so much, Alex. And we're at the point where we're going to take our final break before we wrap up this evening's panel discussion. So stick and stay, and we'll be right back.
Tips and advice to remember. Unless the product is defective or unfit for its intended purpose, businesses are not required to give you a refund on the purchased item if you find a better deal elsewhere or change your mind about wanting it. No exchange, no refund notices should not appear on signs, receipts, or communicated verbally. This rule also applies to items that are on sale. Never sign a blank contract that a salesperson says will be filled in later. Always keep your receipts, canceled checks, warranties, estimates, contracts, and instructions. They can be useful in problem solving if you encounter any problems with goods or services. A message from the Department of Consumer Affairs. Here's what consumers need to know. Customers are entitled to refunds or repair if the goods are faulty or misdescribed. They may choose to accept a credit note if they want to buy other goods from the store owner. Customers need only accept a replacement if that's what they want. No refunds notices are illegal and cannot be displayed on stores. Therefore, they cannot take away the customer's right to a refund. Second-hand goods must be in a reasonable condition for their age and price. The retailer is responsible for the goods which he or she sold to a consumer. You don't have to deal with manufacturers over faulty goods. The same rights apply to sale and non-sale goods. It doesn't matter if you bought them in a store. If a faulty good caused damage to another good, the customer can claim compensation. The customer cannot complain about faults of an item that were made known at the time of sale. However, they still have rights if other faults become apparent after purchase. A message from the Department of Consumer Affairs.
The Consumer Affairs Act of 2003 and its application applies equally to media advertising, websites, catalogs, brochures, pamphlets, billboards and posters, point-of-sale materials and signs, statements made between the salesperson and the purchaser. The Act expects businesses to disclose all the information that they have about the item or service, especially where that information will be influential in the purchaser's decision-making. The Act applies equally to pre-contractual negotiations and to statements businesses may make concerning post-contractual obligations, for example, the availability of maintenance or repair services. Beware of false advertising and scams. Sale advertisements must describe the name, variety, and size of sale items, as well as any restrictions which may not be in fine print. It is illegal to commit bait and switch and promise savings on items that aren't actually available when customers go to the store. The best rule of thumb for any offer is, if it sounds too good to be true, it probably is. In-store sale signs must clearly display the pre-sale price, and the business must have reasonable quantities available. If a store advertises that it is having a specialty sale due to elemental damage or because it is going out of business, liquidating, lost its lease, or renovating, it must have a special sale sign. This is a message from the Department of Consumer Affairs.
Use this checklist to plan your purchase. Decide in advance exactly what you want and what you can afford. Ask family and friends for advice based on their experience. Gather information about the seller and the item or service you are purchasing. Review product test results and other information from consumer experts. Get advice and price quotes from several sellers. Get the seller's refund, return, and cancellation policies. Retailers sometimes do not update their point-of-sale system with current prices. If you think the price displayed is incorrect, inquire at the cash point before finalizing your purchase. Ask whom to contact if you have a question or problem related to the item purchased. Thoroughly read and understand any contract or legal document you are asked to sign. Make sure there are no blank spaces. Insist that any extras you are promised be put in writing. Don't buy on impulse or under pressure. A message from the Department of Consumer Affairs. Tips and advice to remember. Unless the product is defective or unfit for its intended purpose, businesses are not required to give you a refund on the purchased item if you find a better deal elsewhere or change your mind about wanting it. No exchange, no refund notices should not appear on signs, receipts, or communicated verbally. This rule also applies to items that are on sale. Never sign a blank contract that a salesperson says will be filled in later. Always keep your receipts, canceled checks, warranties, estimates, contracts, and instructions. They can be useful in problem solving if you encounter any problems with goods or services. A message from the Department of Consumer Affairs.
Wow. Thank you for staying with us. You have been tuned into a panel discussion brought to you by the St. Kitts and Nevis Department of Consumer Affairs in recognition of World Consumer Rights Day. The topic for this evening's discussion has been Fair Digital Finance. We have discussed a plethora of topics this evening in this panel discussion, and we're about to wrap up the discussion. We want to thank you so much for staying tuned. We're going to now turn to Quincy, who's going to provide some clarity on the instances where some businesses require that person spend a fixed minimum in order to use their debit or credit card. So sometimes a consumer might want to make a purchase, do a transaction, but they're told that they have to use a minimum amount. Quincy, let's provide some clarity on that to our listeners.
All right. Again, I think this is in a similar vein to the whole issue of fees, in the sense that there is a little bit of a gray area there in terms of the minimum amounts. What I would say is that there is a minimum amount can be applied in respect of credit card transactions, right? So if you're paying with a credit card transactions, the merchant typically is within their right to have a lower threshold below which they would not accept that method of payment. However, there is no minimum amount applicable to debit card transactions. Again, this falls within the scope of the overarching agreement that a merchant would have with the financial institution, and by extension, the card brands Visa, MasterCard, and Discover. However, all of this operates within the legislative framework that exists within the territory in which the transaction is being done. And again, I think this is an opportunity for us to perhaps take pattern from other jurisdictions that have set forth some clarity with respect to minimum transactions amounts. In the U.S., we see that in 2010, the Dodd-Frank Act that would have established the Consumer Financial Protection Bureau sought to give clarity to issues such as this. And I think certainly this may be an area that we could look to sort of give consumers greater clarity with respect to minimum amounts for transactions.
Thank you so much, Quincy. And you've sort of leaped into what I had already decided would have been my final question for this evening's discussion, as to allow each panelist to provide their recommendation or areas and suggestions for legislative framework and support that will really allow for doing business online in the digital economy, the digital space, to be much easier. So Quincy, you're kind of off the hook a little bit because you've given us a bit of what your recommendations would be and what they would look like, but I will allow for the other panelists to chime in here.
My recommendation would be that, right now in the Caribbean, there's a digital transformation project going on that quite a bit of islands are participating in it, as well as regional financial institutions. And all of them are geared towards government, improving government infrastructures and policies and frameworks. And one of the things that is critical for the sustainability of digital finance to ensure that we are able to have a stable internet infrastructure within the Caribbean region. So I think that would be where I think I would leave tonight, that recommendation that, all our countries really need to be on board to have that legislative framework in place in terms of how can we ensure that there is stable internet, not only bandwidth, but even access for each and every person to be able to, have equal access opportunities for internet, and then we would see therefore a lot more adoption of the various digital platforms throughout our region, especially even in St. Kitts right now. So I will end on that note. It was indeed a pleasure being on the panel. I enjoyed the lively discussions, and I really would like to thank, on behalf of the ECCB, thank the Consumer Affairs Department for the invitation to be part of this panel.
Thank you so much for being here, Leah. You've already tuned yourself out. But I really wanted to, as you were speaking about the internet and the bandwidth, I know you got so many head nods here in the room, and I know that that is an area that we're desperately looking forward to seeing some improvement in. Alex, what says you?
Solid points. I would just add in terms of data. And we are talking about consumer rights, and we are talking about fear. And I think education came up a lot tonight. And so for me, if we were to, we have spoken about transparency in terms of fees and clarity, we have spoken about infrastructure. And I think part of that infrastructure is that would give that sort of comfort to consumers, I believe, is we need transparent data policies, legislation, just like how they had the GDPR. We need to let people know you are in charge of your data and you have a right to that data and you have a right to make inquiries, etc. So yeah, I think if we want to get into this fair digital finance space, etc., we need to start to, as Quincy would have indicated, tell people you are empowered with your data. Quincy was talking about data security earlier. And one of the things, as you were saying, people might pretend, especially in terms of familiarity. I wanted to say familiarity even in terms of proximity. We have persons who share their data with other persons. You give your child, your sister, your brother, your ATM pin to go to the ATM or to do a transaction, or you allow somebody to take a picture, or you're careless in the hairdresser and somebody takes a picture of the front and back of your card and then use it on Amazon, etc. These are the sort of things. Protect your data. The data isn't just what you share online, etc., but understand and what persons, what institutions hold for you. Your data is how you share your PIN and your information and your password with your child, your relative, or your friend, and or give them access to it. And this is where I would want to see some tighten up in terms of policies and legislation, so to speak.
That very, very strong advice. Very, very strong advice. Thank you so much, Alex. And Quincy, you will provide your parting words as well.
Words. Well, I say I had some words, introductory words, but I didn't use them up front, so I'll use them now.
That's
I would like to extend, congratulations to the Department of Consumer Affairs for organizing this important forum and for its efforts in strengthening the consumer protection framework and overall consumer rights awareness locally. The theme, Fair Digital Finance, I think it comes at an opportune time when consumers worldwide have been facing many challenges. Moreover, financial institutions, consumers and regulators, we are now working to adopt new and emerging technologies, and this type of discourse is critical. I want to say thank you once again for having me, and I look forward to engaging with you further on the whole idea of fair digital finance, technology, and financial services in general. Thank you.
Thank you, Quincy. Thank you, Leanne. And thank you, Alex, for joining us for this evening's panel discussion. I would like to think that we did an exceptional job of having broken down the theme for this year's World Consumer Rights Day, which is Fair Digital Finance. And hopefully this panel discussion would have increased your knowledge gap and your information, your education and your awareness as it relates to conducting business in this digital era. Thank you for staying with us. My name is Patrice Harris. Have a wonderful evening.